If you have received an IRS CP90 notice, we will explain what to do to prevent the IRS from seizing your money. Receiving a notice from the Internal Revenue Service, IRS, can be an intimidating experience. Among the various notices the IRS sends, the CP90, formerly known as the Notice of Intent to Levy and Notice of Your Right to a Hearing, is one of the most serious. This notice is a final warning that the IRS is preparing to seize your assets to satisfy an unpaid tax. Understanding what this notice means and what your rights are is crucial to protecting your property and resolving your tax issues. Before the IRS can levy, it must send a final notice of intent to levy, which is the CP90 notice. IRC Section 6331D mandates that this notice must be given in writing at least 30 days before the levy is made. This 30-day window is a critical period for the taxpayer to take action to prevent the seizure of their assets. The notice must be delivered in person, left at the taxpayer's home or business, or sent by certified or registered mail to their last known address. The IRS authority to levy or seize property to collect delinquent taxes is granted by the Internal Revenue Code, IRC. Specifically, IRC Section 6331, Levy and Distraint, empowers the Secretary of the Treasury to collect unpaid taxes by levying upon a taxpayer's property and rights to property. However, the IRS cannot simply seize assets without warning. The law requires the IRS to provide the taxpayer with a notice and demand for payment. If the taxpayer neglects or refuses to pay the tax within 10 days of this notice, the IRS can then proceed with collection actions. The most important right that the CP90 notice informs you of is the right to a collection due process, CDP, hearing. This right is established under IRC Section 6330, Notice and Opportunity for Hearing Before Levy. The CDP hearing provides you with an opportunity to appeal the proposed levy and discuss collection alternatives with an impartial officer from the IRS Independent Office of Appeals. To request a CDP hearing, you must submit a written request, typically using Form WALVO 153, Request for a Collection Due Process or Equivalent Hearing, within the 30-day period specified in the CP90 notice. It is crucial to meet this deadline, as failing to do so may result in the loss of your right to a pre-levy hearing and your ability to challenge the levy in U.S. tax court. The CDP hearing is an informal proceeding conducted by an appeals officer who has had no prior involvement with your case, ensuring impartiality. During the hearing, the appeals officer is required to verify that all legal and administrative procedures have been followed. You can raise any relevant issue at the hearing, including challenges to the appropriateness of the collection action. The resolution options are broad during a CDP hearing. One can offer collection alternatives, such as currently not collectible due to economic hardship, installment agreement, or an offer in compromise. You may also challenge the existence or amount of the underlying tax liability, but only if you did not receive a statutory notice of deficiency or did not have a prior opportunity to dispute the liability. Ignoring a CP90 notice can have severe consequences. You will lose the right to petition the U.S. tax court to challenge the IRS. If you do not request a CDP hearing within the 30-day period, the IRS can proceed with levying your assets. An equivalent hearing will be available for 1 year, but it does not suspend collection activity automatically. The IRS can move forward with levies if the collection due process or equivalent hearing were not properly requested. This can include garnishing your wages, commissions, bonuses, Social Security benefits, seizing funds from your bank accounts, retirement accounts, investment accounts, and taking possession of your personal and real property. Additionally, having a seriously delinquent tax liability can lead to the revocation or denial of your U.S. passport. Take immediate action now. Gather your supporting documentation. File Form 1-153 to request your collection due process hearing. Consult with a tax professional if you do not want to handle this on your own and would rather someone else interact with the IRS on your behalf. A tax professional can navigate the complexities of the IRS processes and position taxpayers for the best result possible under the law. Be sure to like and subscribe to our channel for more valuable tax tips in upcoming videos. Scan the QR code to watch the video, The Ultimate Guide to Solving Your IRS Tax Problems, to learn more ways to fix your IRS problems. Book a consultation when you are ready to get started. Thanks for watching.